welcome to this Project 54 briefing. We're diving into one of the most critical, yet honestly, least understood forces in global energy right now. I'm talking about China's Strategic Petroleum Reserve. Look, if you're tracking global oil markets, geopolitical leverage, or energy security, this is the stockpile you absolutely cannot ignore. Today, we're doing a precise, evidence-led explainer. We're going to break down exactly how many barrels Beijing holds, how this massive reserve is physically structured, and why tracking these invisible barrels completely changes how we measure global strategic intent.
Okay, let's dive into this. 1.4 billion. Yeah, that is the jaw-dropping estimate of barrels sitting in China's total crude inventories as we enter 2026. I mean, this isn't just a big number. It is literally the largest emergency oil stockpile held by any country on Earth. When we're talking about global energy buffers, this right here is the undisputed heavyweight champion. But, to really grasp the kind of leverage a number like that provides, we need to take a closer look at how those 1.4 billion barrels are actually organized. Now, what's really interesting about this breakdown is that the 1.4 billion isn't just sitting in one giant national bucket. It's actually split. We've got roughly 360 million barrels sitting in a dedicated government-held reserve, and then a massive, massive slice, around 1 billion barrels, sitting in commercial stocks. Treating these two very distinct layers as a single unified strategic buffer, that is the absolute key to decoding China's broader energy strategy. So let's look at that first slice, that 360 million barrel government reserve. That's the official state petroleum reserve. This is the directly state-controlled core, made up of government-held crude stored in purpose-built tankage. And just to be precise, that 360 million figure was the estimated level at the end of 2025. Why is this specific layer absolutely crucial? Well, because this is the portion Beijing controls outright. It's the crude they can release most directly into the market if a sudden crisis hits. To put that government layer into perspective, let's do a direct comparison. On a strict government-to-government basis, China has essentially matched the long-standing American benchmark. I mean, China's roughly 360 million barrels of government reserves sits right in the exact same range as the United States Strategic Petroleum Reserve, which, as we know, holds hundreds of millions of barrels in those famous salt cavern sites. If you're only looking at the official state-owned crude in dedicated storage, China looks like a country that has simply caught up to the strategic reserve norm. But here is where the picture changes entirely. Let's move on and see how this builds. Because that second layer consists of roughly 1 billion commercial barrels. These are held by refiners and national oil companies. See, since 2024, the Chinese state reportedly directed its national oil companies to start adding emergency barrels into these commercial stocks. So in actual practice, this commercial layer now functions as a second, much larger strategic reserve in all but name. It's not just everyday working inventory anymore. It's a strategically mandated buffer.
And that brings us to a really vital definitional choice. The U.S. reports its strategic reserve and its commercial inventories separately, right? Usually we only hear the strategic figure quoted. But because analysts like the EIA and others explicitly treat China's commercial inventories as part of its strategic total, that combined figure gets pushed way past 1.4 billion barrels. This definitional choice is not just some accounting technicality. It reveals how China has quietly built an emergency buffer that is literally in a class of its own, totally dwarfing reserves measured on a strict government-only basis.
Which, of course, leads us to a massive, glaring question. How do we actually know any of this if Beijing publishes absolutely nothing? Because yeah, they don't. There's zero official statistics on this. China treats its oil inventory levels as a highly, highly sensitive state secret. So how on earth can energy professionals and analysts track a 1.4 billion barrel stockpile that the government completely refuses to acknowledge on paper? Well, the answer starts with understanding the strategy behind that silence. It comes down to this core idea. An undisclosed reserve is harder for markets and rivals to trade against or plan around. Basically, opacity is itself a tool. Think about the brilliant strategic value there. If competitors in the open market can't see exactly how many barrels Beijing holds, or even when they're actively buying, they can't anticipate the moves. China gets total freedom to build up or release its stock without sending any signals that might drive up prices or tip off geopolitical rivals. So to pierce through that opacity, analysts essentially have to become investigators. Every single barrel figure we are discussing today is the result of a meticulous reconstruction. We're talking about groups like the U.S. Energy Information Administration, the IEA, and specialist data firms like Vortexa, Kepler, and Kairos. They infer these numbers from observable flows. They track the imports landing at ports, the crude being refined, the exports shipping out. And crucially, they use satellite readings to literally measure the shadows on the roofs of oil tanks to figure out exactly how full they are. It's an incredibly sound method, but since it's indirect, we always have to remember it carries a margin of error.
And through this open source intelligence, these analysts uncovered another really striking data point: 1.1 million. That is the estimated number of barrels per day that China added to its reserves, on average, throughout 2025. I mean, they accumulated aggressively. They jumped on softer oil prices to fill up their tankage way faster than their actual domestic demand would ever warrant. They weren't just buying to use it, they were buying to stockpile. They grew this reserve to its current mammoth size, specifically while the market was offering a discount. So, the crucial point is making a clear distinction here. In energy markets, people always love to talk about days of supply. How many days a country can survive on its reserves alone. But days of cover, that's a shifting ratio. It moves all over the place depending on whether you're using imports, net imports, or total consumption as your denominator. The exact same stockpile could look like 100 days of cover or maybe 130 days. Total volume, however, that raw barrel count, is the physical reality that China actually controls and actively grew. Raw volume, not some shifting ratio, is the true unshifting signal of geopolitical intent.
And this brilliantly illustrates exactly why this raw volume matters. Just look at the 2026 Middle East disruption. When conflict threatened those critical oil flows through the Strait of Hormuz, we saw this massive buffer go to work. China simply leaned on its huge commercial stocks to cushion 360 million barrel government layer. This proves that a stockpile measured in the billions of barrels isn't just some accounting curiosity. It is the physical room Beijing has to ride out a price spike or a blockade without panicking and without being forced to buy in the market at the worst possible moment. All right, let's pull all this evidence together into one clear view. What we have here is the consensus estimate reconstructed from all that trade and satellite data. You've got the 360 million barrel government reserve, which, as we said, is comparable to the US SPR. Then you've got the 1 billion barrel commercial layer, which really functions as the bulk of the strategic buffer. And finally, you have the combined 1.4 billion barrel total, giving China the world's largest emergency stockpile. Remember, since there's zero official disclosure, this reconstruction is the most accurate, evidence-led understanding we have of China's true energy security posture entering 2026.
We've looked at the sheer scale, the deliberate secrecy, and the immense strategic leverage of 1.4 billion invisible barrels. The physical volume dictates the reality of the global market, regardless of what is or isn't officially published. So, looking at all this data, I want to leave you with this to consider. Between the massive commercial layer, the government core, or the very fact that this whole operation is kept absolutely secret, what do you read as the most important signal in global energy markets today? Thanks for joining this explainer, and as always, keep questioning the data.